Hello traders, and welcome to another video review. Today is Monday, July 3rd, 2023, the beginning of the new week, the beginning of the new month, the beginning of the new quarter. So let's take a look what is in the calendar for today. The most important events for today are German manufacturing PMI released already, and this time it disappoints the market participants because it deteriorates from 46.2 to 40.6, which is way below the market participants' forecast of 41 points. Manufacturing PMI data from the UK are scheduled for release at 10:30, and manufacturing PMI should decrease from 47.1 points to 46.2. ISM manufacturing PMI data from the US are scheduled for release at 4 p.m. And in that situation, PMI should increase from 46.9 to 47.2. Those three events are from different countries, and they are the most important events for today. So let's just do the technical analysis of the majors. Euro dollar 4-hour chart looking quite bearish because we got this situation under which the bears keep trying to reinvent themselves again. What do I mean is that we've been trying to break above this trend line here multiple times, even if we consider this trend line to lay like this, and you can see it straight on that we've been trying to break, but no avail. A, B, C to the downside down. Big bullish engulfing pattern from the technical support. Right now we can call it technical support at 1.0836, so let's label it as a green, but the market keeps getting capped from the 50 periods moving average and this short-term trend line. So in order to rally higher, we need to break above this level, and then of course we need to go higher to 1.0977, and then eventually, if this level is violated, we can trade towards the last swing high located at 1.1012. If there is no breakout to the upside, the euro dollar bulls will not be able to rally higher. For today, we got already very bearish looking candle, but this is the 4-hour chart, so let's wait 30 minutes for this candle to close. And it looks like this rejection from the 50 periods moving average and from the short-term technical resistance, short-term technical trend line, which works as a technical resistance, was successful. So bears are under the control of the market. They push the market towards the level of 46, which is below the level of 50. So right now, even the momentum is in favor of the bears, and it looks like the short-term outlook remains bearish for euro dollar. Let's switch to the British pound. So that was gold. Let's switch to the British pound, and the British pound looking kind of similar to the euro dollar. We have the horizontal line. We can see that this is the key technical resistance on the 4-hour chart, and on the daily time frame chart 1.2846. Since then the market has been moving lower. We hit the technical support located at the level of 1.2598. This technical support has been tested. Nevertheless, after a short period of a rally, in attempt like a rally continuation, we are back below the 50, and right now we're testing 100 periods moving average. So it looks like this will be another intraday technical resistance for bulls, 1.2726. This is the 11 I wanted to mention, and eventually the next technical support is located right here at 1.2665. So right now it's being tested by bears. Any breakout below this level will open the road again towards the last week low, which is located at 1.2590, and as you can see right now we are just below the level of 50 on the momentum as well. So there is visible bearish pressure on the British pound right now. From the technical point of view, this movement to the upside is being considered only as the movement, as the correction movement really. So we are waiting for the down move to resume on the British pound to US dollar. Let's find out what's going on the US dollar to Japanese yen. We know that there is a big uptrend on the US dollar to the Japanese yen, and we recently done this technical this swing high, which is of course the technical resistance right now. So last week high was 144.79. Let me just place the line here because that might be a valid point of reference for the bulls today. As you can see, US dollar going down, British pound is going down. Related to the US dollar, US dollar is going up. Yeah, US dollar Japanese yen is going up, Euro dollar going down, cable going down. So it looks like early strength of the American dollar across the board. So let's just take a look here. Looks like an important technical support, 144.15. Now we are locked in this tight range on the US dollar to the Japanese yen, and we are testing the 50 periods moving average. Again, one more intraday technical resistance, roughly 144.89. This is the technical resistance. So momentum might back up a short-term relief rally to the upside, but we need a breakout. We need a new swing high in US dollar to Japanese yen in order to continue this very nice movement to the upside. So please stay focused and stay vigilant if we talk about the US dollar to the Japanese yen. And let's just take a look at the US dollar index at the very end of our short review. What do we have here? Well, basically it's obvious that we can place this technical resistance 103.51 at the top of the last week high. So this is the of course the rally to the upside. This is the top ABC to the upside. I think everyone sees that by now. Let me just point it out so there is no misunderstanding. ABC to the upside looks like down, but please notice the fact that ABC to the upside might evolve into ABC connector like X and ABC to the upside again. However, this movement to the upside looks clearly corrective, which means that this wave C, that the movement after the wave C overlaps the high of the wave A, so that cannot be considered as bullish impulsive wave to the upside. It's ABC to the upside as a corrective cycle, upside corrective cycle during the downtrend. We've made like a local low located at the level of 102.75, a little bit lower. 102.72 was the actual low. There is some sort of a bounce. However, this bounce was very short-lived, and right now the market is trying to resume this rally, but so far it doesn't actually look that well. In the short term, the outlook is bullish, of course, because we're still above the level of 50. However, in order to confirm the bullish development to the upside, we need to break above the level of C. So this is the key level for today for all of you US dollar traders, if you consider the situation on the lower time frames like 4-hour time frame. Of course, any violation of the level of 102.75 or breakout below the short-term trend line here is of course bearish, and then the next target would be 102.29 and then the swing low at 101.80. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.